Hey everybody, it's Eric. Welcome back to the channel. In this video, we're going to continue our exploration and discussion of risk-free SPX trades. This trade you can see I'm in right now expires today. Today is Tuesday, June 24th, and we're about an hour and a half after the open. I was able to get into a couple different trades here. We can see we have a risk-free setup now where the minimum gain is going to be about $95. And we have a couple profit tents. So this is part of the risk-free profit forest where we're looking to create trees of profit areas where if the market closes in that area, we get larger payouts. But the real focus is reducing our risk. And I like to try to get risk-free. Sometimes you can't always get completely risk-free, but I was able to get into this one today. So I want to talk through the setup. Now, mostly lately, we've been talking about 0DTE, and most of the trades here you see are 0DTE. They were added today, this morning. But the very first trade that started it was actually a 1DTE trade. And if I take off all these other trades, this trade started yesterday with a put credit spread at the 60-15, 60-10 level. Let me talk you through that trade setup, and then we'll get into how we created an entire risk-free for the following day, which is, again, Tuesday the 24th. So this trade was a recommendation from Alpha Crunching, which is an analytics site that I personally have created, and I'm the one who runs this, just so everyone knows. And this was based off tomorrow's triumph rate. And what this is a real simple statistic that tells us the percentage of times the market tends to close higher the following day. So we just kind of keep track of that. And this week, Monday, the week of June 23rd, Monday, June 23rd, the TTR or tomorrow's triumph rate was 63%. This 60% is our threshold for this particular trade. And we look to sell an at the money put credit spread basically at the end of the day. And this trade actually shows up in the trade ideas tab. So before the week begins, you can see which trades, whether they're TTR or WTR based trades. This was a TTR 1DTE put credit spread on Monday. The trade was taken at 3:45 p.m. as long as we're above the 20-day moving average, in which we were. And if you click on each of these trades, they'll give you more details about the trade and actually send you to an article that shows you the back test for this trade. Now, this particular one-day to expiration put credit spread over the last couple of years has an 85% win rate. We can see there are periods of time where it doesn't trade. There are periods of time where it does trade. And so it's got a little bit of a choppy P&L curve, but the chop is to the upside, basically. So that's all the information about that trade. So if we take a look at the chart, this was a 5-minute chart of SPX. And on Monday, June 23rd at 3:45 p.m., we sold the one day to expiration put credit spread with the strikes of 60-15, 60-10. We got a credit of $2. So we can see right here towards the close, and it was basically right at the money. Now, we got a large gap up today, which means that this put credit spread immediately went into basically close to max profit. We could have easily closed this trade for a profit and have been done for the day. So that's always an option too. People have mentioned, well, why don't you just close and take the profit? That's obviously an option, is to take the profit when you get it. What we're trying to do is, okay, how can I take some of that profit and potentially create more profit, but at the same time, not give it all back? So that's kind of the idea here with the risk-free trade is I have a trade on, I've taken some risk. In this case, we took the put credit spread risk where we sold it for $200 and our max loss is $300. So initially on the one day to expiration trade, we're risking $300. And we're betting that the market's going to be higher tomorrow, in which it was, right? So the idea now is, how can I take some of my, quasi-guaranteed profit? You can see how far the market is up. It's very likely that this thing is just going to expire worthless and I can make $200. But there's always that crazy chance that the market rolls over, and now I still have $300 of risk on the table. So I'm trying to minimize my risk on the table. And we're going to do that by locking in some of the gains. So on that gap up, I immediately sold the 60-25 call and bought the 60-30 call, creating basically an iron fly down at the lower, sort of at the lower price range that we were trading at. I was able to get, let me show you the order here. I was able to get a credit of $4.65 because this is an in the money call credit spread. I got a massive credit for it because this trade on its own is very low probability. So you get a lot of reward for that risk. But I'm combining that with this trade. So now instead of having a $200 gain, now I've reduced that to $165. However, now I've removed all the risk on the downside. So I could be done right now and say, okay, no matter what happens, I'm going to make the 165. But the probability that this thing rolls over and goes all the way back down to, let's call it 60, 20, 25 area is actually pretty low. So even though, the max payout here is $665, it's a low probability that this will actually land. And we've seen this in my SPX chat group where we've gotten into some of these trades and the market just keeps going and you basically get the minimum gain. So it's really hard to stick this landing sometimes. But I still have $165 of a profit to work with. So on that gap up, I wanted to create some profit a little bit closer to price. So I ended up buying a slightly out of the money put fly, long put fly. I bought the 60-40. My short strikes were the 60-50 and bought the 60-60. This order was 70-cent debit. So I paid 70 cents for this. So mathematically, what that does is now instead of my minimum gain being $165, I've taken $70 of that and place it here around 60-50. With now I have a max gain. If we roll over to 60-50, which is actually very possible given this market. I mean, it's not guaranteed, but if this rolls over to 60-50 and we close in this profit tent, my max gain is $1,000 if we close at 60-50, just over. And we're still risk free for the rest of the day. We now just have a reduced profit, but we have a couple big zones of max gain that if we roll over and close in there, that would be great. Obviously, if we don't, that's okay. I'm going to make the $95. I'm going to minus my commissions, and it's going to be a net gain on the day. So I'm guaranteed a net gain. We're an hour and a half after the open. I don't really have to do anything else today, and I'm probably not. I'm probably just going to let this sit. I did get a question about commissions and exercise fee. Because this is SPX, and I only recommend this for SPX, you can let these expire in the money. Now, for example, today, if we close right here at 60.75, all my puts are going to be out of the money, so they'll expire worthless. So there's no exercise fee. The only fee that I would have to worry about is the call credit spread, because this call spread is in the money. So for these two legs, these two strikes, I would pay an exercise fee. For Tasty Trade, that exercise fee, I believe, is $5 per leg. So I'm gonna pay $10 to let this call spread expire in the money. Now, if we roll over, and let's say we close at 60.45, well, I'd get a bigger payout. However, I would incur some fees here because these would be expiring in the money, if you will. So that's kind of how that works. It'll all depend on where the market lands at the end of the day. But I wanted to share how I got into this trade and kind of continue to post these videos that there are different ways to get into them. And sometimes, I ended up with an iron butterfly and ended up with a long put fly. And that's what made sense to me. Let me know what you think in the comments, and I'll see you in the next video.